Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about the bond market performance in 2022, Southwest stocks drop, and the 2023 IRA contribution limits. But before we begin, as a reminder, this is a financial education presentation, should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The bond market is about to turn its worst annual performance in history. What does that mean for 2023?
Well, good morning, everyone, and good morning, Allison. Hopefully everyone had a wonderful Christmas, big holiday or 3-day weekend at least, and you got everything you wanted, of course. We are not getting everything we wanted from the stock market this year, and, the bond market, which is significantly bigger than the stock market, actually is having its worst year ever, too. So a lot not to like with your investments. I get that. Let's just at least talk about, acknowledge it, and talk about the way forward. So what kind of numbers are we looking at? First of all, you're pretty aware of the stock market sell-off this year. As of today, down 19.3% for stocks. That's going to go down as a pretty bad year. I don't see that recovering much, if at all, in the next few trading days before the year closes out. So big down years, hey, they happen, and you know what? They're followed generally by big up years. I'll have more charts to support that as the new year comes around. But when you think of a traditional balanced portfolio, and I got this question the other day, is our portfolio balanced, Steve? And I said, absolutely not, right? And I think the client was surprised by that answer. It's like, whoa, why wouldn't we be? It's just like, well, if anything's been crushed, it's the 60-40 portfolio, right? Where you have 60% in stock index, 40% in a bond index. Your stocks, if you index, you're guaranteed to be down 19.3 if you've taken no action whatsoever to try to mitigate your losses. You're down 19.3%, and that's index investing, right? You don't care, you just look away and and let it recover. But the bond, if you go down the bond market's down 12.4%. That's down there in that gray, if you can see it there. And traditionally you had the 60-40 portfolio. So if stocks were down, bonds were up. And if stocks were up, bonds were down, and overall the combined performance is going to deliver that, 8% or so. Well, no, obviously not. If you have 60% down at 19% and the other 40 is down at 12%, you're looking at, I don't know, quick math, 15-16% overall losses for the year because you've done nothing. So where was there a place to hide? Well, gold, right? No, gold was a terrible investment this year. A lot of people thought crypto was going to be the new gold, if you will. Obviously, anybody that's had their fingers on crypto has burned fingers right now. So there was really no place. Cash down 7% because that's what inflation was. Losing purchasing power. Obviously, not down sitting in the bank, but yeah. So a brutal year. The only things that worked are private equity investments, which I did push hard. You do have to qualify for some of those. So, it's not the easiest thing to get into because it's advanced investing, but that's what, pension funds are doing and institutional investing. So if you're interested in private equity, let me know. I think private equity is going to be able to continue to outperform even in 2023, even if we have a recession. So something to take note of. But as far as what does this really mean for the bonds? Well, obviously interest rates went through the roof this year, right? With the Fed raising, 25, 50, and then 475s, and then a 50. Boom, 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 all the way up. So you have, mortgages north of 6%, even, CDs sitting around close to 5%. So in that environment, your bonds, if you hold a bond fund, it's going to be slaughtered. If you hold individual bonds, the value of those bonds are going to drop as displayed to you significantly. But if you have the individual bond, you're simply holding it to maturity, so you don't care. I know a lot of you care, and you know exactly who I'm talking to about, yes, they're showing that, the par is 100. Some of them are showing down at 95 or 90 or 85. Well, bonds like CDs or contracts, right? You loan your money out, you get paid a certain percent, and then get your money back at the end. That's it. The stock price or the bond price every day can kind of get you up in arms, but it really doesn't have anything to do with you, to be honest, unless you're selling your position. But that's not why we bought it. So there you go. Here's their commentary on the 60-40 portfolio. What does this mean going forward? Well, actually, it's fantastic for the bond market going forward because it's sold off so much. Now, if you're going to go an investment grade bond, you can get 6%, but if you can get a CD at 5%, why take the risk or the extra 1%? Right. So you can load up on CDs here. If you buy them through your brokerage, you're going to get about an extra percent. You can walk into the bank and lock into a time frame if you want, if you have any questions on that. But really, I would say if you have your bonds here, they're actually attractive to be able to buy for the increased, income you're going to get over time, even if, we expect interest rates to pause. And then, of course, the Fed hopes that they don't have to turn around and drop interest rates. I think that's almost assuredly what will happen. But, that may be off into 2024 before that happens. But if you're sitting in your bonds, if you're in individual bonds, just sit there and hold it. If you're in a fund, just collect the, 4% or whatever that it's kicking off, reinvest it if you want, because they're cheap right now. And again, bonds will return to their valuation probably in 23, maybe towards the end of 23, though.
Next, Southwest Airlines has canceled over 50% of their flights over Christmas weekend. What does this mean for ticker LUV?
Yeah, we were caught up in this. We were kind of fortunate, to be honest, because we were on our way. We got to the airport, but about the time we walked into the airport, they canceled our flight. So we just turned around and went home, right, and canceled our trip. But supposed to be in Anaheim this week. Missed out on a little volleyball training for our youngest, but not really I can't even begin to complain compared to families trying to get home or back from Christmas. So, there's people, the stories are horrendous if you go on social media. But remember, airlines, people treat these as a rite of passage, and they're just not. They do the best they can with the circumstances they have. And when it doesn't work out, you can get mad all you want and scream all you want, but it's just a fact, right? They're doing their best. And Southwest is going to get a lot of bad press out of this, obviously. And there's always going to be ways to improve. But when you think about the enormity of the problem that they're solving with crews and in a highly regulated industry with crews and airlines and maintenance and, ticket folks, crazy in the amount of changes that go in. It's amazing they do what they do. But it's going to go down as an epic failure over this Christmas weekend. They said it's going to continue on for the next few days. The CEO's kind of, it says, cut 70% of its schedule instead of plans to fly only about a third of its schedule for the next several days. So obviously that's going to affect several folks out there. So pull up you just Google Southwest flights. You can pull up any of these numbers. What does it mean for the stock? The stock's actually holding up pretty well. It's only down 5% after this debacle. And realize, if you're, I was on active duty for 9/11. 9/11 happened. I was flying when the airlines were not airborne in the United States. They grounded everybody, then they let the military fly first. Pretty eerie to be flying around the country with no airlines flying, but it is what it is. But we canceled, I think 3 or 4 days of airlines, maybe 5, and they all went bankrupt, and we had to bail them out. Well, it's a necessity for this country, so of course you're going to bail them out. Well, when a company operates knowing it's going to get bailed out if things go bad, that allows them to lever up and take a lot of risk, right? If you know you're going to get bailed out, why would you be dumb not to take the risk? So, they hang on by a thread all the time. I see no reason to invest in airline stocks. I don't care how much you love the airline because of that very fact. They're right on the edge, and a few days down, one big weather storm, and it affects their bottom line. Overall, down 15% on the year is huge, right? That they're only down that much. P numbers look good, but if you're teetering on the edge of bankruptcy all the time, that's just not something that's going to get my money. So if you love the airline because their ticker is LUV, then that's the only reason you're investing, in my opinion, in airline stocks, is to just support the airline. Other than that, I think your money would be better placed elsewhere.
Last, IRA contributions have increased for 2023. What are the new numbers?
Yeah, can we get some good news up in here? There has not been a lot of good news this year, but the inflation number, the increase of I just blanked on, I think it's 8.9, 7.9%, whatever. The CPIW this year that affects Social Security, military retirements, also affects your tax brackets as well as your contributions, contribution limits. All that stuff is inflated by the same kind of number. Now, with our IRA limits, they only go up in increments of 500. So sometimes, you don't see that directly. But let's talk specifically about the question. This is Investopedia, so you can trust it. For 2023, right here, it goes from 6,000 up to 6,500 for most people. So if you're on a monthly contribution with me, expect us to reach out in January and say, hey, if you'd like to continue to contribute to the max, you have to move your $500 to 541.66 or whatever the actual number is, 6,500 divided by 12. Same thing if you're over 50, like myself. You can go up to 7,500 a year now. So still not a ton. You're not going to be able to bail yourself out of your own retirement if you're behind, but you should always put, assuming you meet the income limits, meaning less than, you should always contribute to these things if you can. So if it's 7,500 divided by 12, that's your new monthly, and get it done. Or you can do a lump sum in January, which is really dollar cost averaging on an annual basis versus a monthly basis. So a lot of people are like, oh, I always want a dollar cost average. Well, if you do it every January, you are dollar cost averaging, just on a different time scale. So that's the contributions. The 401k numbers are down here as well. It's 22. I know mine for over 50, it's 22,500. And an extra 7,500, so up to 30,000 for me. Here they are. They're kind of buried because the article's about IRAs. But so your 401k for people 50, for under 50 is 20,500. So that's up a little bit. And then sorry, that's 2022. 2023 is 22,500. So I was right the first time. 22,500 across the board for everybody. So when you break that down to monthly, that's almost a couple grand a month, which is pretty healthy retirement savings, unless you're making well over 100K, right? So do what you can is the point. Always contribute up to the match. Then after that, do what you can to try to max it out. If you're older than 50, you can go up to 30,000. So there also is a provision in Secure Act 2.0, which I'll have more information out likely this week when it's signed into law as part of the defense funding bill, or the government funding bill, I should say. Then that allows you, once you hit age 60, there was a proposal in there to be able to contribute an additional 10,000 per year. So to kind of give you a little more opportunity to save yourself going into retirement, of course, if you're still working at that point. So overall, big picture for folks, January is coming up. Ankerstar Wealth and his team will reach out to the respective clients and kind of, talk to you about your game plan. Do you want to do, can you afford to do it at all? I get it. Not everybody can. But if you can, do you want to do it monthly? Do you want to do it lump sum? Kind of what's your plan? And also you can look backwards towards 2022 and do all your catch up if you didn't maximize 2022. So anyhow, that's what we're here for. Educate you on that. Make sure you stay on track and max out these available things to help you take care of your own retirement.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.